In this video, we'll walk through the Asset Tracker feature in SnapTax. To get started, you'll need to have an asset on record. There are two ways to add one. You can import a bank or credit card statement and classify the transaction as an asset, or you can add one manually. For this demonstration, we'll go ahead and add one manually. Start by entering the date you purchased the asset, the amount you paid for the asset, and then enter a brief description of what it is. Then mark it as a business asset, and enter the percentage it's used for business. For example, if the item, like a desk, is in a dedicated home office used exclusively for work, you can leave the business use percentage at 100%. If your office serves multiple purposes or you run more than one business, you'll want to adjust that percentage accordingly. Since we're entering a desk, we'll categorize it under furniture and fixtures. Once you save the transaction, it will appear in your register. You can see it listed here. Since I didn't link it to a specific account, it's sitting in the All category. You can easily assign a source, such as a checking account, by selecting it here. That said, for transactions paid from a bank account, it's generally easier to import those directly from your bank statement. Now that the asset is recorded, let's head over to the Asset Tracker. Here you can see two assets: a computer that was imported from a bank statement and is currently showing as unreviewed, and the desk we just entered. Let's review the desk first. You'll see all the information we entered is already populated. Click Next, and SnapTax will ask you to confirm the business use percentage. In this case, of the $2,500 spent on the desk, $2,000 is deductible. Next, you'll be asked whether you want to include this in your tax liability calculations right now. If you're ready to proceed, the tool will guide you through your depreciation options. You can take the full deduction this year for an immediate tax benefit, or spread it out over 5 years. We'll choose to take the full deduction this year. You'll see a summary showing how it impacts your tax calculations. Hit Confirm and Save, and that asset is now marked as reviewed. Let's move on to the second asset, the laptop. This laptop was placed in service on March 16th, and it's used about 70% for business, making roughly $1,000 deductible. For this one, we'll spread the deduction over 5 years, which gives us a $211 deduction each year. SnapTax will track that schedule for you going forward. When you roll into the next tax year, that $211 deduction will automatically be included in your calculations. Both assets are now recorded and active. You can scroll down to view the history for each asset and see how the depreciation is being tracked over time. For example, here's the year-over-year breakdown for the laptop. To see the full impact of your asset deductions, head over to the Tax Payments page. This is where you'll find a detailed breakdown of your estimated quarterly taxes. As you can see, your asset deductions total roughly $2,000 this year. That amount flows directly into your tax liability calculation and automatically adjusts your quarterly tax payments. And that's it. Asset tracking in SnapTax is really that straightforward. If you have any questions, feel free to reach out.